What concerns you the most? So we have these trade wars, we have possible extra tariffs. Is it going to turn ugly, or do you see the risk elsewhere? Is the risk in monetary policy globally?
Well, I think that the real new risks of the past few weeks are in the trade area. And it's not because of a tariff and a counter-tariff and that kind of thing. It's because of the possibility of a snowball and a mindset that is talking about arguing rather than negotiating. You know, there is a group of people who say maybe that's a Trump-style negotiations. If that's the case, I wish it was. I would be much relieved. But occasionally things get out of hand. The important thing is we know, and if you ask everyone here at the conference or anywhere else, is it in the interest of the world to have a trade war? The answer will be uniformly, of course not. Is there a danger that we may end up in a direction that we don't want to? The answer also is yes. How do we minimize the danger? And I think that's the real issue. At the present time, the actions that have been taking place, or that have been announced, not yet fully implemented, are relatively measured. One side says something, the other one responds, the third one does, but the important thing is to make sure it does not get out of hand. If it is negotiations, then one needs to ask what is really the important element that is critical for the United States. I'm told that it is really the issue of intellectual property rights and things of that type. What is really important for China, etc.
Yeah.
So what is, like always, the art of negotiations is make sure that you get the minimum that you need, be willing to give up on things that are less important to you, and that's where an agreement can come. And I think it is important. We are talking about the two largest economies in the world. That's not a children's game.
I know, but we saw a little bit of reaction in the markets, but actually not that much. Why? Is there a fog of monetary policy that basically clouds the risks in the world economy?
I think those are two important but separate issues. And I think and I hope they will remain separate. The issue of the monetary policy reflects a long-term strategy. The long-term strategy of the Fed has been we want to wait for the economy to recover, to make sure that there is sufficient robustness, not specific data that jobs data of today or whatever, but rather the trend. There is a consensus. The U.S. economy is recovering. The unemployment rate has fallen. Labor markets are improved. Tax policy has been pro-expansion. The corporate tax reduction has been very positive. The repatriation of profits will be very positive. The deregulation will be very positive. All of this is good stuff. Let's not endanger it by negative atmosphere that comes from the trade.
Dr. Frenkel, good morning from New York. You are experienced at the Bank of Israel with expecting the unexpected, the exogenous shock that comes out of nowhere. I do not want you to speak about Mr. Diamond's letter yesterday, his acclaimed 46-page letter. I know that you're in a different division, a different space, and Mr. Diamond speaks for himself. But I do want to ask you about the president setting us up to be more fragile given certain exogenous shocks. Is America more fragile with the economic rhetoric that we have at this moment?
The economic rhetoric is a matter of style, and it is evolving. This baby called the new economic rhetoric still needs to mature and grow. I don't find it to be very constructive to have antagonistic approach, especially when we are talking about important matters that require negotiations, engagement, collaboration, and we are talking about a very interdependent world in which one large country confronts another large country. Nothing good can come out of it for the rest of the world. So I think it is the responsibility of the leaders really to come to the common ground. You mentioned Jamie Dimon's letter. I want you to be aware that this is one of the most thoughtful letters. It's a sequence of letters that every year he writes, and I recommend that you look back and see how well-reasoned those arguments have been.
Let me make this clear, folks, and I said this yesterday. This is 46 pages. Whether you agree or disagree with James Dimon, every single MBA candidate in America should read this thing cover to cover to see what it says about finance management and also the global accord. Jacob Frenkel, you are one of our original researchers on the dynamics of foreign exchange. What are you worried about dollar dynamics? What is the observation you have on the ambiguity of where the U.S. dollar sits right now?
The dollar value in the foreign exchange markets represents current policies, expected future policies by us as well as by our trading partners, and I think it is going to be extremely dangerous and probably futile to try to manipulate such an important price. The important element is therefore that each company and each country should really create a sufficiently robust environment for itself to be able to manage volatility, rather than hope that some policymakers will take active roles to minimize or reduce the volatility in the market. It is a reflection of steady policies, and that's why I'm so much in favor of steady-as-you-go policies, whether it is on the fiscal front or the monetary front or the regulatory front. Uncertainty is not good for the markets, and I think that clarity and transparency is the most important contribution that one could make.
I mean, away from tariffs and trade, is there uncertainty in a part of the market? Is it a country, is it a region that worries you the most?
Well, of course. I mean, if you look just during the past few months, everyone was talking about North Korea, everyone was talking about Iran, everyone was talking about other parts of the world, people talking about Brexit, which is not only economics, it's also politics. The point of the matter is that there is ample sources of uncertainty that are outside the direct jurisdiction of economic policy making, but have profound implications for the economic realities. And that's why, I repeat again, make sure your boat is strong enough to withstand the wind. And the wind can come from many directions. You are unable always, especially if you are in a smaller country, to change the wind, but you can, and it's only you who can strengthen the boat.
Where's the strongest wind coming from? Do you worry about China? Do you worry about the financial system in China?
Well, China, first of all, is a giant, and it's a giant with huge size. It has been the most important trade destination for everyone. Its share in the world output is gigantic, and therefore one has to be concerned that any source of uncertainty in that large country will be, of course, exported to the rest of the world. The way to address it is to engage rather than to confront. And, you know, one can argue that what we see today in the rhetoric, maybe it's a rhetoric of negotiations, and we will have to wait and see. This is my wishful thinking, that we are talking about negotiations that will end up with we were all living happily thereafter, rather than end up with a skirmish that exploded into a war. We don't need it.
But could this be the end of the WTO? And if it is, what does that do to the world economy and the financial system?
I think it will be a disaster if it is. It should not be. The trading system is one of the mechanisms by which countries are interconnecting each other, by which prosperity is shared internationally, by which one country's growth is transmitted to the rest of the world. WTO is the network of rules and highways that connect those important countries. Why should we put blocks on it? On the contrary, we should clear it up.